Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Another unique week happening. Obviously, we see a lot of outside market influences. Weather's continue to be a big concern. All the talk of seeing some harvest underway with the chops. We'll talk about that and Chinese demand, and we'll just talk about overall volatility. That's happening on this week's report.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back. As you can see, joining me today is Kyle Bumsted. He is with Allendale, and Arlan Suderman with StoneX. And we've got an interesting time in the market trade with a lot of volatility. We had a jobs report, and I kind of wanted to start there, Arlan, get your thoughts on this jobs report and how it might be having a factor on the trade.
Yeah, technically we're in a recession. We've had 2 consecutive quarters with negative GDP growth, and that's how we define a recession. But I would suggest that we're more in a stagflation period than a recessionary period. This jobs growth jobs report showed we added over 500,000 jobs in the month of July, and the recent JOLTS report showed that we had 10.7 million job postings in the latest month reported, which is just below record high levels. We have a very tight jobs market, 3.5% unemployment rate. Wages and expenses are growing by about 5.2% year on year and continuing to show good strength. That's not what you'd expect to see in a recession. So that says a couple of things. One, it says that the Fed is probably going to maintain an aggressive hawkish approach to its monetary tightening policy. It's got to slow down demand, and what this jobs report said and some other data is that it's got more work to do. But it also says the economy is very resilient. It says that there's a lot of money still in the system, and the consumer still has money overall. We've seen some of that money coming back into the beef and the pork markets over the last 6 weeks or so, with strong product demand domestically here. And when will it be that we start seeing that come back into the gasoline market as well, as the sticker shock kind of wears off a little bit? And so kind of money to close out the week coming back into some of those commodities. The one thing that's hurting us yet is a strong dollar, and this jobs report really giving a boost to the dollar when you look at the U.S. economy versus the European economy, with Europe being on the front line of the Ukraine war, going in 2 different directions. The dollar is creating some strong headwinds right now for some of our commodities that are more sensitive to it.
Well, I want to then, Kyle, looking at this from a consumer perspective and beef movement, how do you see this jobs information maybe affecting the proteins?
Well, at face value, it's really good information. I mean, you've obviously got more people going to work. That's really good. But like Arlan said, the dollar is on a tear. It's moving higher. But I think that the jobless claims and whatnot was about half the information. We're going to get that CPI number that comes out early next week. So that's going to tell us kind of where our inflation levels are and stuff like that. But as far as boxed beef and pork domestically, yes. Typically during the month of July, we see boxed beef work lower during the dog days of summer, if you will. But we've seen that actually was higher during the month of July. So that does say that the consumer is still spending money. Now, whether they have the money or they're putting it on credit cards, that remains to be seen. So looking here so far, the first part of August, we have started to see the boxed beef and pork slip a little bit. So that is of a concern because we haven't seen the slippage a month ago like we thought we would when we typically do see that in the boxed beef and pork markets.
Well, volatility is kind of the key word, whether you're looking at grains or livestock at this point, and wondering, especially in the neck of the woods where you live, are you seeing more cows and heifers headed to market because there just isn't grass to feed them?
I think that's going to be a big concern here in the next 30 days in this area for sure. Now we do, historically, we start to move a lot of calves this time of year up in the but down the southern plains, Oklahoma City, they've had and El Reno, they've had bigger feeder cattle sales than they historically do this time of year. And the Texas Panhandle area, even East Texas, they've moved a lot of feeders to the yards there simply because they're out of feed and in some cases just completely out of water. So it comes to that point where we've either got to move them or we've got to figure out what we're going to do with them. And most of them just went to market. Now, talking with them, unless the western half of the United States.
Oh, looks like we lost Kyle there for a second. Oh, there we go. Well, we'll get back to Kyle here in just a second. Arlan, with you, what are you hearing, especially when it comes to crops and needing these grains to be able to feed these livestock?
Yeah, there's some real concerns there. If you look at what the basis levels are doing in the western high plains, it's very difficult to get the corn in there. That's leading to some increase in wheat feeding. So I think we'll be bumping the wheat feeding number up a little bit more as we go forward in the months ahead. And certainly some we're going to be watching the quarterly stocks reports for. A lot of the corn's going to be flowing to the south and to the west. That means, and it's not unusual to see Nebraska corn going southwest as western Kansas corn goes south to Texas and then pulling from Nebraska. We're going to be pulling a lot of corn from Iowa west into Nebraska, and probably a little bit more so than what we've normally seen in the past, because that's where the deficits is going to be, is in the west with this weather pattern that we've seen thus far this year.
Does it make nervousness happen for this commodity market from a livestock perspective if you can't find the feed right now?
Well, absolutely. And this may be one of those years when we see basis firming during the harvest period as end users really try to grab up the supplies, and the farmer's kind of bowled up right now and thinking he needs to have higher prices, particularly with some concerns about what fertilizer prices may do in 2023. Some of the concerns, particularly with supplies being tight in the coming year, with Europe seeing tight supplies of natural gas. And let's not forget about diesel either. We're seeing some of those industrial uses that have been leaning on natural gas switching over to diesel in order to power their facilities. And that's just going to further tighten the supply of diesel. Our available supply of distillates is already 25% below what we normally see for this time of year, as we're just getting ready to head into the harvest season. And that's a very big concern for where diesel prices may be, not only next year, but this year's for harvest.
Kyle, you were sharing with us before we started the program today that it's better just to pick up the phone and call your local elevator than just go by the bids that you're seeing online.
Well, that's right. And, talking with producers, out here in the Western Belt, it's kind of been that, if you call your merchandiser and talk to them a little bit, there's been some instances where, if you can guarantee them some bushels coming in at certain times, whether it's now or even in the future, as far as new crop, they said, I think we can work with you on that a little bit here. We can, maybe push it a little bit, just to, so they're getting their supplies locked in too. And in the case of feed yards, yes, that is a big issue that we are starting to see. And like Arlan mentioned there, I've already talked to some end users in some of these areas here, and they are kind of talking about firming basis potentially through harvest, or that is a concern that they have. Like Arlan said, that the farmers bulled up a little bit, but they also need the corn if they're in a heavily livestock concentrated area. It's for hogs, cattle, or chicken. They need the feed to grind. So we have seen the placements in the feeder cattle. So we are going to have some feed demand for a while here, at least on the corn side of things.
And it's hard to believe when the three of us are talking, it is the 5th of August and choppers are getting ready to roll, which seems a little ahead of what we normally see.
Yeah, that's really a product of the heat that we've had in the Western Midwest, really speeding everything up. And that's going to affect grain fill as well. When you speed everything up, you shorten the kernel size of the kernel. That really doesn't show up until you get the combine into the field. So if you make that kernel 5% shorter, that reduces yield by about 5%. But in the way of chopping, a lot more corn this year, and particularly in some of the driest pockets of the Western ag belt, are looking to choppers to try to recover what's there. And we've even heard some reports in some of the worst places where the choppers just pull up the field and say, no, it's not even worth the cost of the fuel now to run through this field.
Well, we'll keep those custom harvesters maybe a little bit busier this harvest season. Wanted to ask you, especially Arlan, with your ties that you have to China, there's this little elephant in the room of a trip to Taiwan and seeing things kind of build with a little bit of tension. But has it waned a little bit on this factors that she's now moved on to other countries? and China might be just saying, okay, let's get back to our normal trade?
Well, so far, China has kept separate the trade issue from the other tensions. I think that's being tested the most that perhaps it's ever been tested, even during the trade war to some extent. I think that's a real concern going forward. Over the past week to 10 days, we saw China reach a new agreement with Brazil to purchase soy meal from Brazil. Why would they want to do that unless they were worried about supplies from the United States? Would that be because they feared that maybe we would sanction them and not sell them our soybeans? Or would it be because they might decide we just don't want to do business with the United States? So being able to buy meal from Brazil gives them another avenue to meet their protein needs. Now, in the current environment, that means a lot of Brazil's customers would have to come to the United States. So it's kind of reshuffling the deck chairs, so to speak. But that could be a problem down the road, particularly if we start to rebuild those world supplies and more countries have more options. And something we need to watch be the negative ramifications. The Ukraine situation was bullish for commodities. If we see this continue to escalate and China make its move to totally reunify Taiwan, as they like to say, that would be considered bearish for U.S. commodities on fears that we would lose that Chinese market. And that's something that we have to always be wary of going forward. Even with these high prices, they could quickly disappear if that were to happen.
All right, Kyle, I wanted to ask you, as you have the conversations with your producers, what's the one key thing that you've been focusing on?
It's one of the key things I've been focusing on the livestock side here, as far as corn goes, looking out there at the future. We still got a very tight carry out. Our spreads are very tight out there as far as the forward curve. So dips I've been using as far as feed yards and end user procurement, getting something locked up there, whether it's on the cash or futures or options. And then also looking at some of these deferred live cattle contracts, the volatility is very cheap in the options. So some cheap protection underneath these high levels is something to discuss.
Well, thank you to both of you joining us this week. May next week be a little bit more wet and a little bit cooler to help these crops out. We want to remind folks commodity futures and options involve a substantial risk of loss not suitable to all investors. And that has been this week's Nebraska Soybean Board Weekly Market Roundup.